Good morning, all. We're starting a day a little bit early. It's about 8:05 a.m. right now, Eastern Time, on Wednesday, the 16th of September. I think between now and Friday, crude will roll, but we're now, of course, trading the V contract, which is October, the November contract will start. On the indices, we're trading the December contract, with the exception of FTAX. That will be rolling, I think, tonight or tomorrow. Yeah, I think day before it rolls of actual expiration. So that will go to Z contract Z20. We will obviously acknowledge that and inform you that that's what we're doing. Morning Armando, morning Jake, morning Kamal, morning Simon, morning Susie. I do realize we're doing this a little bit early, so not some of you guys are here, but this allows us to finish the recording early, get back to pre-open. I'd love to see actually 8:30 the data release, so on and so forth. So this is a good start. We just got to see how I can handle it. It's just a little time shift for me, and then we're in business. Oh, okay. All right. So as usual, let's start with our econ data. Today's FOMC. So retail sales at 8:30, that is crucial. I'm sure they're going to be looking at it themselves inside that famous, infamous big conference room that the world was safe back in 2008, and most likely again starting in March or April of this year with under guidance of sage guidance of Jay Powell. We need to watch the communique at 2, and then go on into the press conference. We'll be trading it. It's a little bit wild, but it's your first time with us on either non-farm or FOMC. These are two favorite days for me. Volatility is very high. We have to concentrate. It's not for kids, and I have thrown people out of the subscription, the closing subscription, for misbehavior during that time because the impact is heavy. So, morning, Dennis. How are you, sir? Please come and join us here. We're starting a little bit early. All right, retail sales. It's consensus 1, so it's already the consensus is expecting a downtick from 1.2. Look at the range. Okay, it's pretty wide. X vehicles. That's almost half. Okay, almost half. This is the expectation from last month. So something to watch. X-rays and gas, also a little bit, not as bad. But it looks like without vehicles, it's a big drop. Right? So we'll see what that comes out. That's first data point. Second one, we have business inventories and housing. Not too crazy about business inventories. I don't think that's going to be much higher. But maybe, you got to have some really decent guidance to say, I'm going to build some inventory right now. And we're entering very, very uncertain times. I will promise you that's why we got the OTF trading out of the way quickly. I will promise you the next 90 days is going to be 90 days you haven't seen in a long time or ever. Okay? So again, focus, no unneeded interruptions. Make sure your systems are good. You need to take care of your systems. We're more than happy to help you get set up, but maintenance is you, not us. Okay? Can't do that. Yeah. We can't be open tech support forever. You need to maintain. We do help. We're hoping that you're learning by now how to maintain a machine at top shape because you're in the bowel zone and you're at the edge of the envelope there. Okay? Given the technologies we've deployed. Okay, in business inventories, that's actually upswing there. That is expected. Wide range also. Okay, wide range. Look at that resolution. So we'll see how that goes. I'm looking for housing market index is not a big number. The next week, is it next week or is it tomorrow? 77. Yeah, I don't even know what this is yet. It's just if you haven't used it for a while or never used it, yeah, I'll pass. I'm gonna be up ADI on Friday, and consumer sentiment is the last day of the fourth week. So no, I'm sorry, that's third week. So you got sentiment, yeah. Sentiment that is important to me. Well, I'll speak, really, James Jeez, you've come a long way, babe. Yeah. Ran into him a couple of times in Chicago. He would hang out at my watering hole, yeah. Union League Club, yeah. And then leading out, no, but where is the, that's it. Tomorrow number is crucial for me. Not just regular initial jobless claims. Remember, 21 weeks negative. 20 week of it, 1 million or more. Last week was the first time we dropped to 884. Housing starts crucial. Let's go there. Yeah, there's nothing to show down here, guys. This is just a webinar. This press conference. Let's look at how housing starts. Where's that coffee? Hold on. Very much tight range, and looks like so far steady. Okay. Pyramids, it's had an uptick. This is a good consensus. We'll find out. That's crucial. Jobless claims. Let's see what jobless claims they're expecting there. Steady again, but not. Look at that ratio. Yeah, steady about 850, 800, 900,000. Okay. I don't know about that. We'll go back to this. Retail sales. How did we come up there? Did we look at it? I forgot we had it. Yeah, we did. That was supposed to be. Sorry about that. So let me come back to Philly Fed. That's a manufacturing, East Coast manufacturing local index. It's important. Okay. Wow. Okay. You see what's going on? We got a comment. After slowing to a still strong 17.2 in August, forecasting September for the Fed coming at 15.5. So it's down ticking, yeah. And then a little bit lower even in the range, yeah. Ooh, yeah. Well, if the jobless claims stay up, the activity is not going to be improving. It may be downshifting. So, listen, we still have a lot of unemployed people. Not a joke. It's called consumption. This is a consumption-driven economy. All right, let's go to charts. Over, what time is it? 8:12. 7 minutes this part. Good. Moving forward. Remember, it's not a produced product. This is not a fancy operation. This is just a bunch of traders trying to do a decent job, understand what's going on. Okay, we went up, no question about it. I think it was 17 handles, something like that. So in NASDAQ, we're crushed between the 50 bar, this is the 50 bar, this is your 200, and 0 sig, okay? The breakout is imminent. Either it's got to happen or we got a problem. What are we doing overnight? Hold on, let's go over here. We're up 17. Hallelujah. Welcome to America. Okay, good. And we still lead. Okay. And U is history, right? Look at that U. So let's get this out of the way. All right, we're just looking at the rollover time, and those are these. Okay, now, and we down ticked. It's down ticked on VIX. Good. Okay. Yeah. All right. We're at 28,000. Number 29.5 is the high. 29.6 is the high. That's what Admiral Tico October 12 said. February 12th. Daddy, I think we're going to short this sucker. I said, yes, boss. Yes, boss. Let's do that. And rest is history. Yeah, just go to Time and Digest. I'll tell you what we did. I'm shooting for time of the year. I mean, with every atom in my body. And I'm going to be unrelenting from here to December 31st. Because 2 years ago I was ranked 1 for 10 years. No, I'm saying for 8 years. If I nail this one, I'll be ranked for the decade. This decade is mine at Time and Digest. And taking no prisoners, okay? No prisoners, period. Bottom line, we're putting up on CIDIF because of this event. You see the green is lighting up, rotating. What's that level, Jack? Hold on. I'm going to go to 15 here, Jack, because I want to do the same trigger. Yeah. Much better, Murray. Much better, Murray. Yeah, let's go to 15. And we're going to trigger that up as a default. So, good, right? And so, the shape hasn't changed. Just the color did, okay? And the slope hasn't changed. Look at the slope. It's beginning to rotate. Remember, this is VIX. The blue is VIX. The smoothed line is exactly that. It's a smoothed line. And it's got color coded so we understand the trigger. Over 15 or VIX. Remember, VIX goes over 15, the color changes, not the smoothed line. So this is very fast reacting. Okay. And if you go back here, if it drops, which I don't see it right now, yeah, that's it. Then it goes, see that? It's got to hit below 15 to go green. Okay, are you with me? All right. All right, let's go here. Now, breadth thrust is beginning finally to turn up. This sucker does not move that often. It's very slow, gradual. But the signals are strong. You see that one? Yeah. So just finally begin to rotate. Now we're at negative 28 on McKinnon oscillator. From the bottoms, this was the abyss. The abyss was at negative 202. Anything below 300, you're in the launch pad mode. At 39A, you're ready to go. It's a Saturn countdown, so we're not there. No way. Because why? The drop wasn't enough. We're back here. All right. When Tico said back here, he said, remember he said in that webinar, we're looking spring equinox or 18,000 or both. Well, the son of a gun nailed them. Right here, it was both. But look at the values were. Yeah, look where the signal has started. That we're about to get into launch mode. But there was no confirmation. Just like up there, we're going on a upper edge. Here's rising, for example. You can get overbought. It was really still oversold. Okay, and you see what the cost was. I mean, actually, it was trying to show some Momo, but they would crush it again. But why? Because Admiral Tico said spring equinox or 18,000. You're 27. Once 21.7 was gone, our first target, as declared in February, we knew there was more coming. Okay, it did not stop at 21.7. It was hot knife through butter. So you got to look at the reactions. Okay, you got an objective. You look at a chart. News comes. Events happen. Buy and sells come. What was the reaction? Okay, now what you got to do? That's how you recalibrate where you are, where you're trying to head. So then we says 18,000. 27 was December 2018 low. 18,000 was when he was elected. So basically Wall Street slapped him in the face and said, you're no good. We're taking all of this away from you. And those who were the Trumpkins who were buying the dips, now they're getting colonoscopies. Yes, yeah. Pardon my French, but yeah. Because they kept buying the dips. I've got a guy I had a cigar with last night. He was down to 4 mil? No, 7 mil. Through this process, yeah. Why? He got back in again. He dumped. He got back in again. Well, the wrong names, and not enough because he's scared. You get scared, you're not the same. So. Remember, for longest time, it was go-go days. So this was really complete shock, but not to Admiral Tico. No. Why? Well, we've discussed that before. Let's move on. All right. The problem is, why do I bring that up? I want to refresh your memory that if SKEW is correct, we could have nothing like that, but that was a one in a lifetime probably event or 1 in 50 years event. But we could have a decent downdraft. I would expect it to at least retest 3,100, if not more. Okay. Let's see. I don't know. Also, we didn't know we were going to get for that go 38% down in 5 weeks in, let's say, February 1st. I know how to get short. I've done some research. I know how to get short. And I start selling some assets, get more liquidity, try and get more of the people that were trading with us on the front saying, guys, we're going to get short here in a large way. Sometimes we may have to hold at night and so forth, which was against our contract. But so not to break the contract, we would go flat. This is the TCM, Tico Capital Management. We would go flat and near the end, like 415, no, but let's say 410, 405. Between 405, 410, you would see, you remember, I was here. Getting out, wait, forget the half an hour between 4:30 and 5, go back in at 6. Why? New legal day. Go in as a new legal day and go in. So, all right. Okay, shoot. Long story short, okay, that's so good. All right. Let's go on to DT. I'm sorry, DT. That's the trender. Here's what I want to talk to you guys. Probably the most interesting chart I want to talk about today. And I don't know these things. I just look. I bring the charts up and I start recording. I just take a look. I did not look at it last night. It was a birthday of a very special friend, and I ended up staying there a little longer. But we were here back by 11. We had to. We just had to get back here. What happened is that we are heading up on transportation. For the economy as a whole, that's a great, great omen. Okay? What's the interpretation? I don't know. Don't tell me it's Trump. Yeah. There's no guarantee. Or Biden, for that matter. That's not the guarantee. So, we need to figure this out. And we just don't know it. Okay, so, we are not doing so well with Russell. Okay? It's kind of in line with the NDX, but this is way ahead of SPX now. So while this dropped and this held on, it's a decent, nice puzzle to ponder and think about. Remember, transportation is a discounted value of the future economic activity. Okay, economic activity. Yeah. Morning, Dennis. How are you, sir? And it's promising. I want the economy to go back up. I just want to have a president, because what we have is not a president. You have a chaos guy. I want somebody who can think. I'm not sure Biden is the guy, but we end up usually having pretty poor choices. But we have to save this nation from itself. So that the way it's running, all the departments are in trouble. I mean, we don't really have a government. We have some chaos. That's all. Really think about it. And not that I want to have deep states, but some reform would be needed, absolutely. But I don't want a dysfunctional government. All right, let's do a normal. So we leave that chart for interpretation of the transport, but something we need to look at. Just download $TRAN. If you have our indicators package, apply the classical Sigma channels to see where we are. You don't have to look at D-trender mode, but D-trender is the difference between the price versus 50. That's this part. This 200 is which is down below, is transportation minus. I'm saying minus 200. Now let's blow this up. You see what the history is? Yeah. I gotta go back some more. Why are we not plotting more? I don't know. Okay. How many days do we have? So okay, you can see now if I go and say, okay, this is what I do. Okay, I try to go back and say, okay, if these are our events, how far we went. You see how far the rubber band was stretched. Look at it now. Okay, now that should not surprise you because we did this. Look at this. This is a 20, and that's it. I'm sorry. This is right before. This is 2015. That's why I just moved into Florida. Right. If you look at 18, this was a big drop right there. Okay, right up there, yeah. Which would be the low there was. Well, this is transportation, sorry. It's kind of different. Yeah. Okay, but this is 2016. It's actually forewarned we're gonna have some problems in 16, and then you had a drop there, pull back up. Okay. This is election time. Right about here. Yeah, right about here. There's a little drift down to that. That's election time. This is the big 21.7. I'm saying, yeah, this is 21.7 on the Dow. That was the low we were looking for a test. It did. And then look at how we were down here. This is like what's this trend? So, no, this is not DYA, but you could see how this also gave up from a high of 11,623. That's all-time high. It went down to below 7,000. Oh yeah, I remember that time of the year. This time, like mid-March. I didn't know where we're gonna go. I mean, I just said if we don't stop at 18, the next stop is 14.8, which is a 50% pullback on the Dow. That's not gonna be good. That's not gonna be good. Okay. All right, not a whole lot of new highs yesterday. I think we need to get through the center line. We're still on a buy and sell. That prediction that this sell is inverted came through so far, but the game is not over. Okay, we need to break that 200 the central line and get it over it. We may be able to get there by Friday. We'll see. Remember now, this is Wednesday. What week we're in? Option expression. What do we expect in option expression? A reversal. Okay, a reversal from prevailing trend. So if we're getting high here, maybe we'll go today and tomorrow, okay, and then it may sell off on Friday. Keep that in mind. That's a data point. Morning, Craig. How are you, sir? And then SC1 Momo, yeah, we got above a zero line here, center line good. We're positive on Momo. Hello. Now these do change during the day, but they're minuscule. These are again end of the day Solomon data. For this, we need Solomon data because it is involved with a bunch of internals, including advanced decline. The problem is that until we, and it's a special application of advanced decline because using SPX advanced decline, and then goes through a filter, and then it computes the segment levels, plots it as a one item. See that? It's a one item plus. It's actually an indicator. It's not a price situation. Okay, there's a price, but this is an indicator. So this is most meaningful at the end of the day. Okay, during the day you can see a signal doesn't mean anything. It will change some between, let's say, 3:30 and 4. That will start early at times. So you need to wait for, if I'm running these, I wait for like 4:02 to 4:05 in the afternoon to get the settlement data. As it reads now, we came back up, it's over zero. I'm above center line for SC1. Forget what these levels are. The levels means nothing. It's the ratio, it's the pattern that matters because this is a scrambled, so people cannot figure out what we've done. By design, remember this was used by hedge funds, not directly. I have to send them charts, but I still don't want to give them any cool. But some of these guys are really super smart. You go there, and you're dealing with PhDs in the data science, the data capture, data science. And these guys are heavy duty. They can read your mind. A couple of small questions, you may slip something out, and the cat is out of the bag. So I don't do that. I go there and say, this is it. Here's my interpretation. I don't tell them what it means. All I know is that when this baby says we're ready to rotate, we're ready to rotate. And that was it. Most are very honest people. They just want the signal. They want the interpretation, but you never know. Okay. All right. So SQ, which is a tail risk for S&Ps, it came back up. Still negative 1, negative 2. For the last few days, it's been there. I think the signal is done. Where we're waiting for is that, am I looking for another signal? I'll be surprised if we get one again in the next few months. I think the signal is done. That means that the pushes are out there. The short position, the long, deep out of the money SPX puts are out there. They're established. Now we need to see the reaction of the market to this signal. This signal you usually get maybe once a year at best. This is close. This is 7:30. This is December 13. How I know that? These dates are marked in my brain. This is a very strong tool. Recently introduced by SIBO, probably 3, 4. No, probably. I'd say about 10, 12 years now, yeah. And they've gotten better at it. Also, some days the solution is not provided. It cannot be solved. It's just like MIV. Sometimes you cannot solve back mathematically. So they carry nothing. They put 0 there. It's a blank. Then the chart, because it has to match the price of this price SPX on top, which never misses a day. Yeah, unless the whole markets are closed. And we don't need that. Hello. Yeah. It draws a line. So you get little jagged looks. But there's most likely in between there's no value. It's just taking the last 2 observations, drawing a line to it the best it can. Okay. Given this M condition here, I think we need to see what the results are going to be out this way to the right before we interpret anything else. Will we get a signal post-election? Possible. I just don't expect this to give us another signal till past. I think this signal was for the election. It's in place. We'll see. I think people are just a little bit nervous, but that's normal. It doesn't matter which side you're taking. What if we don't have a solution? Just like this doesn't have a solution at times. What if we don't have a solution on this November 3rd? How long remember 2000? How long the country is going to be in chaos? We don't know. And legal issues and so forth. So we need to do that. Now, this we changed. As you know, we took U out. V is, and it went off this morning. U was settled. Okay, the September contract. So your activity is huge today on the October contract. That's a V. So we're long V, short, what do you call it? January. That's a 3-month spread we need. We're just gonna, just for fun, we're gonna go there and say G21 there. Sounds heavy. Okay, there you go. That's your G21, and that's a February. We're gonna see a February term structure. That's a term structure of the VIX in terms of volume. Here's the value. You gotta keep this in your mind. That's a surface, vol surface we're in. That's a volatility surface we're in. Okay. Don't want to get into heavy mathematics. This is not a calculus, advanced calculus class and so forth. Plus, it's been a long time since I did that. Yeah. I got 5 out of 5. And the night before, I was drunk at Nathan's with 3 blondes. Yeah. And I was driving the Ambassador's Rolls Royce. Yeah. So I get home, my mom said, "Farag, don't you have a big exam tomorrow?" The phone has not stopped ringing. That's why I stayed up. I thought something was wrong with you. I said, "Mom, go to bed." I come in the morning, I get up in the morning, long shower, go in there, a cup of coffee. I leave the exam 10 minutes early, just to psych out all the other kids. And I got 5 out of 5. That was a BC exam, not AB, calculus. That ensured when I went to Princeton as a sophomore. At 16 at Princeton, I became sophomore in financial engineering. It was written in my destiny I got to do this one day. I just was lost. In between, I got lost for about 20 years, doing other things. Like a B-2 bomber on F-18. Yeah, exactly. Long story, but let's not go there. Let's get back here. But vol to me, once I was sent to UCLA MBA program at AGSM, Anderson Graduate School of Management. Jack Shelton, my first professor, started this thing in me that, hey, this is Black-Scholes. The most important input to Black-Scholes is 2 things. What? First, X minus S. Or in the money or out of the money. X is your current position. S is your strike. Okay, the strike of the option. So X minus S is crucial. Are you above it or are you below it on a call or put? That's one. 2 is volatility. X minus S is easily defined. Any idiot can figure that out, right? Here's the strike I want, here's the price. Not vol. Vol is not that simple. Okay. As a matter of fact, this coming Friday, next Friday, Mark Caffrey and I are going down. He's down there. He's in Coral Gables. He's going to go up to Plantation. I'm going to meet him at Plantation, Florida, the headquarters for trade station. We're doing a lunch with him. We want to talk about some of the additional stuff that he wants on the vol side, on the volatility side of the option station. So, because this is the critical part of vol, and it's all about volatility. The critical part of knowing your volatility, which is you interpreting it. All you can know on volatility is the bid ask. The only forward you have is the bid ask forward. Well, what is that? That's a delta T time slice. Okay, so you're just looking at infinitesimal amount of time forward. That's not good enough. You want it because you got to trade a swing trade on an option. Yeah, you need a little bit more than that. So you need to go back and see how you reacted in the past. I think maybe that will be a guide. No guarantee, but at least a guide. Why? Percentage-wise, you can quantify that and say, so many times in the past, it has worked this way. Okay. Hi, Nancy. There we go. Let's see. So, welcome. So that's what intrigued me. That's why I spent most of my adult life is understanding that. Of course, I don't know if you remember that article I published with Barron. I was sitting in for Steve Sears. He was out in using our VIX equivalent, VIX protocol for Google I'm putting sigmoid channels on that calculation. Basically, give you a VIX like you have a VIX for, they have a VIX for, go to Vols, where's the Vols? There we go. Here's a VIX for, trace, what do you call it, NASDAQ. Here's a VIX for Russell, here's a VIX for oil, but I don't like this much because they're not using the contract that we're looking at. They're using the USO. USO is a mix of a lot of options. I mean, futures. It's not too crazy about that. And it's been really not responsive as it should. The best way is good is the current contract. But there's a feud between CME and CBOE, and so they cannot use that. This is not a CBOE, this is not a CME or COMEX. So, long story short, here, I forgot what I was talking about, but anyhow, my interest in volatility. Oh yeah, Google. So we took a CBOE compliant, I'm saying VIX compliant like this, which is the old VIX. This is the old VIX computation. It's very pure way of looking at volatility, not this one. This one is computed based on volume of different strikes, so it can be manipulated. Again, CBOE has left a back door for the members. That's wrong. He's wrong. This is the correct one. This is based on the cube around the price. These are calls and puts. By the way, my VXM was running before CBOE. How do I know that? The guy who designed the VIX, now called the VXO, the old VIX, yeah. Dr. Rayleigh, he called me because I found the error in his calculations on his website, on one of his PDFs. He called and he says, why are you doing all of this? I said, I'm not going to compete with you. I'm Dr. Rayleigh. I'm not going to compete with CBOE, but I want to have my own data. I think Jake may remember that, of the old VIX, original VIX compliant, very pure on stocks. He goes, how many? I said 500. He just said, there was like, you could hear the pin go. 500? That takes a lot of resources. I said, I understand. Yes, sir. Yes, it does. But I'm no CBOE. I'm going to try. And I did. We did. So we take that. Now we have some, then we read some historicals. Then how do you interpret historicals? Well, I've taught you guys. Make sure, hold on, Craig. Craig is giving commentary. Craig, that's the wrong room. You know that, right? Nancy, would you reprimand Craig for printing in the wrong room? That's a technical issue, Craig. That's a technical. Should be a tech support room. Okay. What is that? Oh, Kamal's updating us. Kamal, you should put that in this room. Oh, you did? Okay. That's actually trading related. So you guys have got to change spots. So retail sales came in 0.6 versus 1.1. That's no good, Jack. Okay, so let's move forward. So anyhow, so we predicted what the gap was on the chart, on the vol chart, saying we got to go visit that vol chart gap, okay, on Google. Well, next big event was earnings. So I said, around earnings, I would expect that. Guess what happened? Earnings come 3 weeks later. This was printed in Barron's. Over 1 million eyeballs. I look at it just online. I don't know how much is the, because this is Steve Sears' article, column. I'm just a guess writer. Guess, not ghost. Guess writer. There's a little write-up on, what I do. He was out of town. He assigned it on the online version. He assigned us one day for each. So each day we would write a column. Each person I'm not next day. I would write one column. There were like 5 of us for these 5 days that it was out, or 5 weekday, and we had over 1 million hit on my article. Earnings come 3 weeks later. Guess what happens? It goes to that price at the first tick. Remember, you shut down for the earning, right? Stock is closed. Earning comes. Then there's imbalance. They give a best estimate when it's going to open. It opens at my price. That was in that article. He comes back like, Farry, were you after my job? I said, Steve, never. You keep your job. I keep mine. So, we're good friends still. But he was like, huh? I said, yeah. Yeah, I put my best hat on, gave him the best information I could, and this is what my data tells me. So, anyhow. And that was an interesting July 15 or 17, I forget, of 2008 on Barron's. You can take a look. But they refused to plot the chart. They said the chart is too complicated. I said, what? Like, your average net worth of a Barron's reader is like over $1 million. You can't understand it. That Sigma channel with a vol in there, because it would look like this, maybe, yeah? Okay, it looked like this because it's a vol. Except it was daily. It was daily. And then, but that will give you the extreme readings. The idea of a Sigma channel, so you know, is just to create a reading of a Sigma channel. To create a relative benchmark of itself. So it's constantly comparing itself with itself. So as it moves, you could see from the fear to greed. Now, if it's VIX, you got to invert it. Remember that. If it's a volatility asset, you invert. So these are bullish the move on the market, bearish on the VIX. So we have to interpret that inverse. Okay, let's get to SP2. We're running a little bit late. SP2, my favorite and oldest indicator. Not favorite, but my oldest indicator. Yes, that's probably it. My oldest indicator is saying that we're halfway there, buddy. Hang in there. So if it can hold on to the 50 and rise above that, next target would be 75. This was a deorbit. Okay, we're reorbiting. Okay, this deorbit, we came back down, got to here. Now, after we pass this, there's always when we go to a critical level, there's a pause. If we jump, move, you're changing orbit. That's going to be a magnet. You're going to be at 75. That means we could we close above this level. We could do that today, given where the futures are right now. We're up 11 handles. Okay, it could easily shoot us up 1 or 2 above. The trick again is what? Expiration. Prevailing trend. A lot of people are buying calls right now. They got to get worthless. Otherwise, market makers will lose too much money on Monday. Okay? Yeah. I remember I gave a talk at SEMA when I said that. There was a father and son there. And the fathers turned around and told the son. And they were from Middle East, I think. But Americanized. So I told you the game is rigged. And so son stands up. And the dad says, "Oh, sit down." I said, "Please let him ask his question." He says, "Do you think the game is rigged?" I looked at him around the back of the room, all the SIBO guys were there. I said, "Depends where you sit. It depends what you look at, but it definitely is not the level playing field." No. So anyhow, so they may try to push it, move it up today and tomorrow. Okay, push it down Friday, early in the morning, bring it where they want for the SET, the settlement value for SPX, $SET.X. Get that in. That's what I look at. You'll see on expiration, that's the number I'm looking at. I'll add it to one of my radar screens to look at that number for that time. And then once it usually happens within the first 45 minutes, maybe half an hour. Once that's done, then we're out of the European expiration, which is the indices, and then American expiration starts, or that's continuous. I'm sorry, American expiration goes on right now too. It's called early exercise. Those will go, which is basically SPY and Qs and the stock indices. This is a quad witching now, guys. Happens 4 times a year only. Why? Because stock index futures. That's what Admiral Esposito was involved in. He was head of business marketing and really developed the exchange. We wouldn't have single stock futures without him because the exchange was about to fail. Probably for the previous 5 years. It was just right then. We know that because they were inviting us to come in to make a market, basically, to provide from a publishing standpoint, make a market. Not the trade part, but talk about it, do webinars, they would compass this, that. At one point I said, "Stop, guys. You're not getting any traction. You need to get somebody who knows this product better than you guys." And then, like, next conversation a year later, Admiral was there. And then I thought, he may have a chance. And then he did. He got a little lucky. And then 2008 helped a lot, by the way. That drop in 2008, and remember they locked it, no trade time, no short list, especially your financials. Yeah, that helped a lot to get single stock futures because you couldn't do that to futures. You can't say there's a no short capability because there's long, short, or flat. That's all you have. So that's really a lot of institutions went there. He was on a phone getting, especially like Goldman Sachs, and once he had Goldman Sachs and Morgan Stanley internal hedge fund. On the single stock futures, I think the future exchange was guaranteed. It changed. It really changed from a going concern comments by the accounting firms into, hey, I think we have a chance here. So, long story short. So next 2 or 3 days is going to be very phenomenal. This is what we could interpret. September expression is always key. I remember in 2008 I had a presentation. I don't know why CPO, there was a 3-day presentation. They put me on the Friday. Why couldn't you put me on a Wednesday or Thursday? Anyhow, so I've got positions coming. I got 2 screens in front of me, 2 different laptops. I'm giving a presentation. And as the 8:30 ring came, I said, guys, have a coffee. I got to watch my positions. One of the guys says, what? Can I come over? I said, no, don't get up here from the seat. No, this is private. That's why it's facing me, not you. And it's not on projector. Hold on, let me finish my expression, and then we go. And this was a wild one. And that was a week, actually, that just started no short list for the financials. So like Green Hill, a couple of names, we went long for 1 week only on an option. And at the open, I'm dumping. Sell, anything I could go. Plus send the email out to others who say, guys, get out. And that was a good week. And then that's all she wrote. After that, we had disaster. Now, this is already after Lehman filed. Lehman filed the prior weekend. But there was a little blip there. We took it, we're out, and we knew we had to because you don't know what Monday looked like. So usually September expression is tough. Remember that. All right, but let's move forward. Okay. What happened to my thing? Oh. All right. Let me. No. I was here, Jack. Okay, there we go. This is what I'm going to go to. Okay. And let's see where we are. This is usually the last chart we finish the market timing with. Okay. We pulled back up 63.73. See that? Again, 20 and 51. Separations opening and then tighten up a tad. But there's a good separation here, guys. Okay. This was not violated. That said, we're going to continue up, and we are. As it gets closer, be careful. These 2 lines, 20 and 50. You can go by the underline. It's just super noisy. You can see that. Again, $ Sierra, Papa, X-Ray, Alpha, 200 Romeo. This is what you put in the stockcharts.com. There we go. And then you can go through some detail there, change things and all that. And make sure this is, I think 10 and 20 are default. Or get rid of it, whatever, but I will put 2050 in there. Okay. Once you update, it reserves it, it saves it, it gives you your URL changes, just save that. That means you're going to repeat it exactly like this. So, heading up, in my opinion, we have a lot to catch up here to new highs. And that's the test I want to see, right? I want a price going to test that or higher, and then take a reading. I will bet you this not be up here, or even it will be more. Probably will be a little bit more than that. Nowhere close to this. Okay, but this was a great short, by the way. This was a great short. That signal there, and look at that separation. Look at that separation. That just kept on telling me bleeding will continue. Yeah. So, so not uneventful so far. The way I look at this is when it changes orbits. Every 5 handles, every 10 handles, somewhere in that range. So we need to get above this reading, whatever that level was. Looks to me like 67 area, and then better yet, get to 70. They'll beat these two, then we have an interpretation to do. Right now, noise level. Okay? All right, let's go to... no. Okay. All right, so we're going to go to... well, let me open MB. I want to look at MB, which is that gives us our, that's quick. Give us overnight view of the futures. So, and then we go to fractals. Here we go. No. Hold on, Murray. Yeah, MB, okay. This is overnight. Let's go to 30 minutes. So we conform to what you usually have shown other days. There's a retest for a center line. That's a 0 sig. But uneventful a bit. And then pulled up. Made a high at 29 area and pulled back. Never made it to 3 sigma. Remember, downside we hit 3 and 4. This is the stress points. This was right before the close, or no, I'm saying right before. What time is that? What time is that? Oh, that's the close. That's the close. Yeah, there was a. Oh, that's right. I forgot who said it. I think it was Armando that said tough close. Yeah, that was a close on the on the cash side. And here we are, 13 handle. Now, remember, this is about 130 on the Dow. So again, slow crawl up, most likely into tomorrow night, and then let's see what happens on Friday. Okay. I used to trade the open, especially on an expiration. I would trade in this condition. I would trade a Z contract, but using as a U as a signal, because U is the one that's going to be settled. Okay, that's the result. So, there's a window there you can trade it. It's usually between like Eastern time, I'd say about 8 o'clock, 8:15 to about 9:45. You know, while the U is not settled yet. U is not settled because there's a high correlation. Okay, and there's a play there. Why is that? Because the 500 names that have to be open. And the trick is that here's the catch. Again, another factor for SIBO members is that it's the opening of each 500 names. It's not the value of all of them when the last one opens. So it's not a real-time value. It's open of each bar. Open of each bar. This is remember. This is the open, right? That's the close. This is the open. That's the close. It's opening of 500 names. So by delaying a few of them, by DUs or other issues, then you can delay the settlement of U. And that creates a little havoc there. If you keep looking at that, understand it, before SCT comes. Once SCT is published, you're done. Trade is over. Get out, get out. You've done what you could. If you're on the negative side, your stop has to take you out. If you're making money, SCT is the time stop. When SCT comes, you're done. Get out. Why? Because now the 500 names are out, the settlement is done. Now the market is going to be freed of U contract influence. You're trading pure Z now. Okay, you got to understand the expiration mechanics of it. Otherwise, you're shooting in yourself in the foot. All right, let's go to fractals. What time is it? 8:52. We got to hustle. Okay, MBS is providing a lot of support there, as we see. Okay, we have been on the upper side. Traded. We did sell off here. What time was this? This was 6:52. Okay, yeah, okay. All right, that's about time I start checking. Yeah, I was here about 7:15, 7:12. As I was checking the systems, yeah, this happened. Good, yeah, okay. Vols are low. Again, Bijan, modified Bijan bands, B targets, below K targets. That's modified Kettler. Keltner, I can't say Keltner. Keltner, I have a Kettler drawing machine. That's what I'm taking. I love it. This is I've just started playing with. This is a Keltner. Close, but not the same. Totally different. Yeah. This says volatility is dropping. Okay, so we gotta watch. These are too close. We want something that would give us a fast solution there. So fast solution in the sense that we do have a volatility crunch here for time being, but it could be quite pre-open. Slope and color. So we're seeing still a decent, very slow, gradual rise. They're all right translation. You see that? You go up, drop a little bit, go up again, drop a little bit, go up again. That's right translation. Okay. What we had earlier, a few days back, were left translations. Okay. That's like that we could see. And how do we know? It's underneath the center line. If the center line is provided, this is a left translation. A peak or a max or a ceiling, that's the left translation. On the right translation, the center line provides a support, not a ceiling. It's a floor. You see that? That's a floor. It's very simple to interpret that. I suggest for doing that, watch the Excel, the large. Do not use shorter term ones because it's just not shorter term, but small trade sizes. Because those guys are maniacs. And it's just, remember, we trade our personality, okay? The guy who trades Tesla, and you trade Tesla, you probably have the same personality. We're close. Trust me. Because if you can tolerate that, that's the space you're in. It's like a club, okay? All right. Anything else? Any questions for me? This ends our presentation. But before I log out of the recording, any questions for me? You can put it in the trade room right now. If I see none, I go and close it. I mean, we go and post it. Took a little bit longer than before, and I know Craig Kendall is sharing with us some sage advice that says Nathan's have went out of business a few years back, and no more good-looking blondes. I'm not sure if I agree with you, but it's. And remember, beauty is an eye of beholder. What about Russell? What's that? Jake is asking, what does that mean? That's not a complete sentence, Sarah. Well, I'm more than happy to answer a question about Russell, but I'm not sure what the question is. And Jake, I may be okay, but I'm not a mind reader. I'm okay with the market timing, but not with mind reading. So would you give us a complete sentence, please? Thank you. Oh, the view of the Russell. Oh, you mean Russell futures? We don't carry that. We found out that Russell futures would not meet the minimum requirements of OTF, especially fractals. We were running it as with some difficulty for regular OTF. When we went to fractals, no way. There's just no such a distribution to be found. And remember, there's a maintenance involved. At least once a month, or maybe between once a month and 6 weeks on the average, they have to recast. I'm going to be doing it this week. Now we have 5, 6, 7 days of a Z contract. We couldn't do that with Russell, RT-wise. If you want to look at the chart of it itself, hold on, let me take that out. Let me go. Yeah, I can go into a individual chart of it. That's canaries. Okay, so let's go to canaries chart. This is canaries in a coal mine. Yeah, this is the Russell, and this is the Russell. There you go. You'd see we're under pressure at sigma levels. Let me see if I can do a better job there. Hold on. Just remind me that not to. Hold on. Let me see. Let me bring that over. So this is a $RUT. Let's go to time frame of daily. Okay. Let's put a Russell on let's put a Sigma channel on. Hold on. Yeah. One thing I'm not answering this towards you, Jake, but it's a general comment. It's just observation. One thing you want to be careful, because I got my hand burned. That's all. I don't want to see others do that same. You would. Okay, there's your Russell. Okay, pure and simple. The lure of Russell is that it moves fast. Okay, sure, Jeff. Anytime. The lure of Russell is it moves fast. And it's got some futures running. But look, if you look at the options. They're not as liquid. I'm not saying they're not liquid, but not as liquid as SPX, SPY, Q, so forth. I know the toughest one is the NDX probably. The NDX options are just a bear. Okay, that's really, really a problem. I wish there was SQ for NDX. Oh yeah, wow. Like SKEWQ, something like that. Oh, I would love that, but they would have a hard time. No, they wouldn't. That would be liquid enough to compute that. Yeah. Okay. But anyhow, but Russell is a sporadic. It's in data science, in DSP, digital signal processing, we call that not contiguous. That's right word. Not contiguous pricing. Not continuous, but contiguous with a G. Okay. So what happens is that in your trading, you could get whipped real fast, and you go very close to your order. The biggest problem with the Russell is the stops. Because it's so erratic, people with the right mind say, I'm not going to trade this without the stop. The point is, though, it goes for those stops, hits and comes back. So you're going to get constant stops out on both sides. It's just wild. Yeah, and because it's a liquid, there's not really a true institutional level two-way market. It's just wild. So I would be careful. But here's your timing. 3 sigma levels here. Hold on, there we go. So you get the focus in here. This is the March lows. This is Equinox, right? March 23rd. Bravo Admiral Tico. And also, it's going to lead. I know why Jack is asking that. He knows it too. This thing is going to lead. And you could see it. First down, first up. And it's going to lead. And right now, it was oversold. I think that's also going to come back. I will interpret this in a different way right now. It seems to me it's just following our indices. Yeah. But also, its expression is wild also. So if you could avoid that, I would. Russell has burned my hand, and I used to do IWM options. You probably saw that in the option package years back, and it's just, if your hit rate is 4 or 5 out of 10, might as well get a coin. Why are we doing that? I want to get to 60 or 70%, because if I get you to 70% on the average or a long number of trades, at least 100 trades, at least 100, not 30. Don't tell me 30 is a proper sample size. That's for Mattel making a widget line. This is trading, so you need to go larger than that. I would say 100, 200 trades. If you look at that, if I can get to 70%, 65%, I'll make up for 35% risk management. As long as my head is screwed right, I know how to put the risk management on, and that saves me the other 35%. Or reduce that 35% to minimal hit. Remember, there's a number of trades, not the amount, so that my losses are small and winners took over. But I need 65 to 70% on the winners. When your hit rate is 40%, 50%, might as well get a coin. You don't need all these fancy computers and fancy indicators, so gotta be practical. All right, we're done here, guys. We gotta close this up because we're at 9:02. All right, thank you for coming here early. We planned to do this earlier, so we accommodate most people request that they need to be ready for the market starts at 9:30. Okay, let's start.